Hey everybody, Courtney Smith here with our Wall Street winners for August the 5th. Boy, the markets are getting rocked and socked. Let's dive right into it. This, on the other hand, will soothe you and make you feel very calm. And when you finish reading it, you will feel calm, peaceful, and approaching nirvana. Well, the S&P 500 cracked under heavier than normal volume. You can see that very, very clearly here. We saw a lot of what triggered it there was really two major factors. The first one was the president is going to threaten, I should say, technically threaten to raise tariffs on 10% on $300 billion worth of Chinese goods. This exacerbated ideas that, hey, maybe we're not getting any progress at all in the trade war. In addition, and maybe more importantly, the Fed lowered interest rates by 1/4%. Now, that sounds like it would be bullish, but everybody knew it was coming. So there's the old saw, buy the rumor, sell the fact. But then Jumpin' Jerome came out and said, well, don't think that this is just the first of easing. We'll have to take a look again. So the market had been looking for 2 more cuts this year. Now they may not be looking for any more cuts this year. So those are the two factors that hit the market this week. Another thing that hit it was selling pressure came up sharply. The little red line, which is selling pressure, is now above the green line. There was more selling pressure in the market, and that's the first time we've had that situation since June of this year, when we went into a buy mode. More buying pressure than selling pressure. The NASDAQ, of course, cracked as well. The key with all of these indexes is we broke the previous lows. So we had just made new all-time highs a week ago, but we broke the lows that we made in the middle of July. Seasonality indicator has been neutral now for, I don't know, since like February or March or something. I mean, a long time. It's been neutral, which is great, which means we have not been aggressive in the market, which has been the correct way to be in the market, not aggressive. It's been a choppy, sloppy affair. So that's helped save us a lot of money. So we've made modest money, but not crushed the market. Well, right now, we're making lower lows on our seasonality indicator, IWM. So it doesn't look like we're going to change to bullish this summer at all. Our seasonality forecast, which comes from Stock Trader's Almanac, highly recommended. You can see that we're now in the middle of August. And this period is where we change from bearish back to bullish. And we start to move on a bull move up into the highs in mid-September. So this dip that we're seeing is not going to be a long-lived dip. This is not the beginning of the big bear market. And instead, it's a dip. That's all it is. But the problem is that we're probably not going to make another high for many, many months. We're going to probably now rally back up toward the old highs that we made a couple weeks ago or a week ago, but we're not going to surmount them. The yield curve remains under zero, and it's been under zero effectively since the middle of May. There's going to be a recession. There's going to be a big bear market. It is all but certain. You can never say anything certain, but as close as you can get to certain, I'm certain. And it'll probably be in early next year. Asset allocation, man, they ran from the stock market. All of that stock was selling. So where did they put the money? They put it into the bond market. They took it out of stocks and put it in bonds, safe haven buying, a flight to quality. Our stock market riskicator, the same thing. They said, you know what? We don't want to be in these sexy tech stocks. Let's go get us some old-fashioned consumer staples. Let's get us some utility stocks and get out of these sexy tech stocks. Global shares also hit hard. They're actually weakening more than the U.S. market. Bonds, of course, is where the money went. And you can see bonds just took off, which is exactly what I told you was going to happen last week. So last week, we changed our opinion from we're going to approach the old highs at 133, maybe get as high as 134, into we're going to make new highs. And I think that's going to continue here. It's not to say we won't have a little bit of a retracement here, because we did move pretty quickly, pretty fast. But nonetheless, we're in a clear bull market, and interest rates on the long end of the yield curve are going much, much lower. And what that means then is that the yield curve is going to get much worse, because the long end of the yield curve is going to lower interest rates faster than the Fed is going to lower interest rates. The yield curve will go more negative. The bear market will come sooner, and it will be bigger. Our bond key factors, the most important one is the blue line. It collapsed to new all-time lows. It's never been lower in Germany. That's what the blue line says. So the dollar originally popped up and made a new high, and then immediately came right back down. And so it's back into the long-term trading range. If it would ever break out, I'd want to trade it. Gold broke to new highs. You know, I started to get back bullish again on gold, but I've been teetering the last few weeks. I'm now solidly bullish gold. I want to be a buyer of gold. I'm a buyer of gold. I'm long gold. I want to be long gold. I think gold is embarking again on another leg higher on this major bull market. One of the key reasons is the bottom chart. Our key gold key indicator there skyrocketed to new highs. That's what dragged the gold market higher, one of the factors. The middle indicators actually got more bearish, and the top one continued its bearish, but the bottom one is more powerful than the other two, and it skyrocketed higher. Crude oil took another dive. So as the Fed disappointed everybody, and as there was increased threats of more trade war, that weighed on the oil market. If there's not going to be a lot of global trade, we're not going to need a lot of global oil. And if interest rates are going to stay higher longer, that's going to slow the economy, the global economy. So we ain't going to be needing us any more crude oil. And finally, Bitcoin started to move up. So at this point, we've got no position in Bitcoin. First time in months we haven't had a position. And it looks to me like we're actually starting to move higher, and that we're going to move into a new bull leg. But it's not for sure yet. So at this point, my conservative trading strategy, which has made you a lot of money in Bitcoin, we're going to wait till it breaks to new highs at that 13,844 level before we buy Bitcoin again. Now, I may revise that very, very soon. The purple predictor is bullish, but at this point, a lot of resistance above the market, so let's be conservative. We'll hang off for now, but definitely if it breaks 13,844, let's buy again. All right. We just finished our Orlando Stock Financial Freedom. It was fantastic. We had a great time, great group of people. Coming up next week here in Orlando, we're doing our Option Success School, so that's super cool. Now, coming up later in August, we're doing Los Angeles, Las Vegas, we're doing in the middle of September. And most importantly now, that masterclass for stock trading is coming up in October. It's 3 days long now. We start on Saturday, we end on Monday. Now check this out. So Orlando, we're basically almost full. We got, I don't know, 50 people or something coming like that. I don't keep track, but we've got a full house based on the size of the room we've got. Then we got Las Vegas in September. Now here's the key, the master class of option trading. So I told you that we were doing stock master class on Saturday, Sunday, Monday. Then what's going to happen is on Friday, Saturday, Sunday, the next Friday, Saturday, Sunday, we're going to do Los Angeles. So we're just taking 3 days off in the middle of the week, and we're going to book it so people can come and take both the master class and of stocks and options, and we do give a $1,000 discount if you buy both of them. So please contact our office. This could very well be the last time we offer these courses ever. All right. Bear market, you know I've been bearish for some time, but this is critical. You need to buy this course to know how to trade it, how to predict it, etc., etc. And for option traders, we have 7 top trading tactics for $7. A little short video course all about the tactics of trading options, not the strategies, the tactics. All right, freebies, you know we love you. Of course, we'd rather have you be a fully paid up member, but hey, we can't have everything in our lives. We're filled with disappointment, but we love having you here anyway. Fully paid up members, hang on just 1 second.